Let's focus on Nvidia, because that is something that seems to have had a negative impact on stocks in Asia to some degree, and to some degree weighing on Nasdaq futures as well. How is this filtering through into the market psyche, Paul?
Well, I think, as you say, basically a minimal impact, really, Anna, considering how much excitement there was over what we were likely to see. In after-hours trading, there was an initial sort of knee-jerk dip, but then it came back and sort of wobbled around a little bit, -2% there or thereabouts. There was some disappointment in the likely profitability in the fourth quarter based on the forecasts and the costs that it's likely to be incurring. And so that's possibly where the weakness came. Also, of course, we just know that the market's expectations are so very high that it's very difficult to surpass them. But what I think is one other way of thinking about it is, you know, we saw so much of that activity in the options space that if we do, in fact, get a relatively small move this time from Nvidia's earnings, then a lot of those options are going to expire worthless, and those that were selling them, writing them for the market, are going to come away with a premium. So maybe there will be some people defending and trying to keep it in quite a close range as well as we go into trading session today, which could damp some of that volatility as well.
The Indian market has been flirting with some key technical levels recently. Does the Adani news push it over the edge?
It certainly feels a little bit like that guy. We're through the 200-day moving average, for example. Indian stocks into correction territory and underperforming the rest of Asia already. So this news, you know, while we're still waiting for some more of a response from Adani on it, does seem to paint a little bit of more of a negative light over the Indian market. And I think what's interesting here is, you know, we haven't really seen very much of a correction in Indian stocks for almost since the bottom of the COVID movement. And so much retail investment money has come into that since then. They're not used to seeing this sort of a correction, and there'll be some people who got into it late that are starting to think, oh, I don't really like the way that this is going, maybe putting their cash as well. And it might have further spillover impact into the economy as a result of that wealth effect. So something to keep an eye on if that starts to tailspin a little bit as we take out some of those technical levels.
Paul, we've heard a lot from ECB speakers. We're going to hear a lot more as well over the next 24 hours. Did anything stand out to you? You flagged euro-yen as something you're watching, but, you know, the yen moving around so much on Japanese economic dynamics and on geopolitics, of course.
That's right, and we were talking about that yesterday, and it seems to be playing out a little bit today, notwithstanding the most recent headlines that you were talking about with regard to Russia, Ukraine. But we do have a lot of ECB speakers today. We already had Villeroy de Gallo talking about how, you know, we're close to victory on inflation, and that will have the market thinking all the more certainly that the ECB is going to keep on cutting, weighing down on the euro, while at the same time some comments that we heard out of the BOJ's UEDA today maybe suggested that a December hike is still in the cards, and so that had the market a little bit more hawkish or bullish on the yen. So you have lower euro, lots of pressure there, stronger yen as well. That seems to be the market's favourite trade.